So next, direct tax. In direct tax, what are you going to see is first chapter. Discuss the taxability of a balance amount withdrawn by an employee from a recognized provident fund at the time of leaving the service. Time of leaving the service, he is withdrawing the provident fund. It is taxable or exempted. Mm. Good question, right? So during the service, if he withdraw, that is taxable. After the employment, after the retirement, if he withdraw, it is totally exempted. But after the completion of service of not completion, after the termination, it is taxable. So we want to see the three things. Accumulated balance withdrawn from the recognized provident fund account would not be taxable in the hands of employee if in the following conditions satisfied. Employee has rendered continuous service to the employer for the next of 5 years. The employee is not able to fulfill the above condition of such continuous service due to his or her service has been terminated by the reason of his or illness, and or by the contracting or discontinuance of the employer business due to some other reason beyond the control of the employee. On occasion of the employment, the employee obtains another employment and the accumulated balance due and became payable to him in transfer to its employee account by a recognized provident fund maintained by such employer. So he's been transferred or gone to another employment. Then it is exempted. If the accumulated balance became taxable due to non-fulfillment of any of the aforesaid condition, the total income of the employee will be recomputed by the assessing officer if the fund has not recognized from the beginning, and the employee will be liable to tax on the additional tax due. Okay, that's the thing. Examine the following statements in the context of the provision of the Act relevant to the previous year, 31st March 2013. Addition to the income made by the invoking the provision of section 68, any are subject to normal tax rate as applicable to. What is 68 section? 68 section is unexplained income, unexplained expenses. In the case you have some income which you can't able to explain, what happens? 60 percentage tax. A statement of section 115 BBC, where the total income of the assessee can include income of any of additional section 68 shall be liable to 60% plus 25% surcharge plus 4% under section income tax and under section 68. That is the thing. So plus surcharge, if applicable surcharge plus 4% additional health and education cess will also be there. Every jurisdiction in the domestic law prescribe that the mechanism to determine the residential status of a person. In the case a person is considered to be a resident, both contracting state, it became necessary to apply tiebreaker rule. Okay. Discuss the matter applicable to the tiebreaker rule. So, what does a tiebreaker rule state? Let's see. Tiebreaker rule will be applied to the following manner. The first test is based on whether the individual has a permanent home dwelling place available to him at all times continuous and not occasionally. As a permanent house, வீடு இருக்கா? Permanent address, not permanent home. Permanent home na land on his name. If an individual has a permanent home available to him in both contracting state, he will be considered as a residing in the contracting state, where his personal and economic relations are closer. In other words, place where lies a center of vital interest. Now, this preference is given to the family and social relation, occupation, place of business, place of administration, and properties, political, cultural, and other activities of individual. So, in the both state, you are having family. At the same time, where is the most family? The most that's the most relatives. Where is your whole business is carrying on? Where is the source of income? So, is there. In the case individual's permanent as home available in both contracting state, it is not possible to determine in which has his center of vital interest. In the case where the individual has a permanent home available to him, is neither contracting state preferred in the given contracting state where the individual has a habitual mode. Habitual mode. எங்க பூவா பூவா எங்கேருந்து வருதுன்னு பார்க்கணும். If the individual has a habitual mode in both contracting state or in neither of them, he shall be treated as a resident of the contracting state, which is a national. If the individual is a national in both or neither of the contracting state, the manner left to be considered by the competent authority in the respective contracting state. So, feeding the first of housing, next house, where is the relation? Where is the source of income? Where is the political? Where is he voting? Everything you see. Then there is the second third case. அதுவும் ஈக்குவலா இருக்குன்னா want to see vital interest அடுத்து எங்கன்னு பார்க்கணும். அதுவும் இல்லைன்னா contracting state habitual mode where he stays mostly that you want to see habitual about that is also not the assessing officer will to deal with it. Mr. Ramanand, after pursuing 25 years of service, opted for the voluntary retirement under the approval scheme, received in the amount 20 lakhs on VRS compensation. He is advised the tax consultants to claim exemption to the extent of an specific second tendency, putting his voluntary. VRS okay. Also, relief under Section 89. He is ordered to have an expert opinion, consult you and ask whether the VRS compensation is permissible under this act. In this case, assessee has benefit to benefit one of the assessee has 10 tendency to benefit on the one of the section 89 relief and tendency. He cannot get the benefit of both the section at the same time. As Mr. Anandan gets a benefit of 5 lakhs under tendency and relief under section 81 on respect of compensation to receive on voluntary retirement, but not on both. So the advice to give him tax consultant is not correct. Okay, because voluntary retirement on 5 lakhs up to that, but as per the amendment, it's cost of 10 lakhs actually right. When Mr. Divyam avails a benefit of LTC, long-term capital gain, capital LTC, okay, leave travel allowance, okay, concession, and went by air economy on a holiday, okay, economy class or business class, 25, 124, along with his wife and three children, consist of son age 4 and twin daughter of 1 age. Total cost of ticket reimbursed by the employer was 90,000, 20,000 for two adults, 30,000 for the children. State the reason the amount can be claimed by Mr. Divim out of the reimbursement is not subject to tax. Will you answer different where among the three children, the twins were 4 years of age and the age of the son was 1 year of age? Among the three children, yeah, because it's restricted to only two children, not three children. That's what he's saying. So, Divyam can avail the exemption section 10(5) on the entire amount 90,000 reimbursed by the employer of the leave travel concession on the same was availed by himself and his wife and three children in India. A journey is also undertaken economic class airfare. This is a restriction only two children to get the exemption in section 10(5). If it is any of the case of the multiple birth which takes place after the first child, the restriction upon two children is not applicable. But the age of the two daughters more than the age of the son, then the restriction upon two children under the section under the applicable. Therefore, Mr. Divyam cannot avail exemption in the case of three children. Exemption to LTC available to only to two children. That's what we're saying. So hence 10,000 only 30,000 divided by 1 by 3 reimbursement one children will be chargeable to tax under the head salary and balance LTC 80,000 will be exempted to 10 under 10 10 5. And then Mr. M working at MPO Limited for last 10 years. He is granted option on 1721. Okay, by company to purchase 800 equity share at the price of 250. Okay, the person during which the option can be exercised to purchase 800 shares at the predetermined price of 250 per commence from 1st June 27 ended at 31st March 24. Mr. exercised the option on 15/3/23. Okay, 1 year before and purchased some 500 shares good. Fair market value of the said date was 6,400 on the Bombay Stock Exchange and 6,500 on National Stock Exchange. SE has recorded the highest volume of trade volume of trade in the same way. Company has allotted 500 share 24. The fair market value of the share is allotment 7,100 and BSE has recorded the highest value of traded in the share. The option was granted for making availment of rights to the nature of intellectual property rights. Yeah, right. Determine the taxability of perquisites due to making any differences in the options granted for providing technical know-how. Okay. The prerequisite of the suite asset equity share shall be taxable to previous year. Being the previous year allotment of same such a, the value of the sweat equity share shall be fair market value of such shares on date on which option is exercised by the assessee by reduced by any of the amount actually paid by recovered from assessee is respect of such shares and assessing it. So under rule 3.8 of income tax rule 696, the fair market value of the share on the date of exercising the option shall be the price of the share of recognized stock option the record the highest value of the traded share. Hence, the value of the taxable purchases of equity shares, FMV, fair market value, is the what? So, 500 shares, 6,500 minus 250, 6250 into 500. That is what? 312500. This is the value. The provision applicable in the case to a sweat equity share option granted for making available trades. The nature of intellectual property gain for providing technical know-how is 31 lakh 25,000. அவ்வளவுதான். Super. Examine the crucial of any of the four of the following problems, issues in case of contracts of provision contained in the Act relevant to the assessment year 2025. Support the answer given yes. Company receive liquidity damage 25 lakhs from the supplier and pay plant and machinery for failure to supply the plant and machinery within the prescribed. Okay, the liquidity damage they receive within the due time they did not provide. Assessing of the treated as an income chargeable to tax against a claim of the company treating as capital receipt. What is it? So some money need the asset need to be recovered, but or asset is being delivered lately, so they are charging 25 lakhs penalty. So they are reducing 25 lakhs payment. What the assessing officer saying it is an income, so you need to pay tax and everything. Assessing the capital receipt, na okay, see. As a liquidated damage received in connection to the capital assets or capital receipts, should be reduced from the purchase price of the plant or machinery for the calculating actual cost. Very good. Hence, the treatment of EAO of the receipt as a taxable is not tenable. It's not correct. It's not tenable. Not tenable. A similar view was echoed by the Supreme Court CIT Saurashtra Cements Limited. That's what right. Saurashtra Cement Limited. Like this such a case was there. That's what you want to say. State the region where the following transaction attracts income tax in India. The hands of received section 9 of Income Tax Act 1940, 1961. இங்க வந்துட்டு இருக்காங்க. A non-resident German company which do not have any permanent establishment in India enter into arrangement for execution of electronic work in India. Okay. Separate payments are made towards a drawing and design which prescribed by engineering fee. The assessee contended that the business profit should be taxable in Germany as there is no business connection within the meaning of Section 9 of Income Tax. தப்பு. Income accrued and arise in India, taxable in India. The fees and technical service taxable in Section 917. In this case, separate payments made towards drawing and design, describe engineering fees. As a nature of DTA பார்க்கணும். In the nature of this technical services and therefore it's taxable in India, virtue of Section 917. Uh, Actential Craft CIT. As per the explanation of Section 9, where income is deemed to be accrued arise in India, Section 917, income shall be included in total income of the non-resident German company, regardless whether the residency or place of business or place of business connection in India. A firm of solicitors in Mumbai engage in barrister in UK for an arguing a case from before Supreme Court India. Payment of 5,000 pounds was made as per the terms of professional engagement. Firm of solicitor in Mumbai engage in barrister in UK. So they're doing service in UK and by her arguing case before Supreme Court in India, before the Supreme Court of India. case before Supreme Court of India. Barrister in UK. Okay, barrister on the Indian. So accrued arise in India. The payment of 5,000 pounds are made by the terms of income accrue arise in India to taxable. Section 9 to all income accrue arise in whether directly or indirectly through or from any business connection in India. It is deemed an accrues arise in India. In this case, there is a professional connection between the firm of solicitor in Mumbai and barrister in UK. Barristers in UK. This establish this expression business includes not only the trade and manufacture, it includes within the scope of profession as well. Therefore, the existence of a professional connection among the existence of business connection under Section 911, and it is also held the Supreme Court of Barandra Prashant Roy 14 IT. Hence, the amount 5,000 point paid to the barrister of UK as per the terms of professional engagement constitute income which is deemed to be accrued arise in India under the Section 911. Hence, it is taxable in India. Very good. Amount paid by Government of India for use of patent developed by Mr. A, who is a non-resident. Government of India pays to non-resident income who is India for use of patent from them. Income arise from India, taxable. Section 917, 916. Income by way of royalty by way of Government of India is deemed to be accrued arise in India. Royalty means consideration, interlay of use of payment. Therefore, the amount paid by the Government of India use of patent development by Mr. A, non-resident, is deemed to be accrued arise in India. Hence, is taxable in India. Sai Engineering, a non-resident foreign company, entered into the collaboration agreement in 25/6/23 in an Indian company and was a receipt of interest of 8% debenture for 20 lakhs issued by the Indian company is considered for providing technical know-how for previous year. What Indian company issuing receipt of 8% of debenture. Okay. டெக்னிக்கல் நோ ஹாவுக்கு வந்து 20 lakhs rupees சர்வீஸ் அதுக்கு நாங்கள் டிபெஞ்சராக கொடுத்துட்டோம் டிபெஞ்சர் கொடுத்துட்டாங்க they are giving debenture for the debenture they are paying interest so our income accrue arise in India for the technical fees what he did which is income accrue arise in India 20 lakhs is also payable when he received and 8 percentage of the interest also taxable. 20 lakhs being value of debentures issued by the Indian company concerned to providing technical know-how. It is the nature of fee of technical service deemed to be accrued arise in India. Mr. Sai Engineering, non-resident foreign company under Section 917 due it is taxable in India. Further, Section 915 income pay of interest payable by a person who is resident in India is deemed to accrue arise in India. Therefore, interest income from debenture from Indian companies deemed to accrue arise in India in the hands of Sai Engineering, virtue of 915. Hence, it is taxable in India. The question specifically requires the candidates to examine the taxability of the above transaction section 9, the provision of double taxation avoidance agreement, if any applicable for the above cases, have not been taken into consideration. That you should write. Mr. A and Co. A property developer, a builder disclosed unsold flat as a stock in trade in the books of account as well as wealth tax return. Okay, let us out of his flats offer the same as a income from the house property by claiming statutory reduction 24 of the Act. Okay, assessing officer disallowed the statutory reduction, the tax is the same as the income from the business. Decide the correctness in the action of the assessing officer. He is claiming what stock in trade. Stock in trade is not business. Then if you let it out rent, then it's income from house property. That is a different clause. So you can combine both. Issue under the consideration the case where the rental income derived from the let out flat discloses stock in trade and the books of account as the wealth tax return. Property dealer would be taxable under the head income from house property, profit and loss account of profit and gain of business or profession. Section 22. The annual value of the property consists of many buildings, lands, and apartments that too in which the business assessee is an owner. Assessee is an owner. Other than such portion of such property as he may occupy the purpose of any business and profession carried out on him, the profit of which is chargeable to income tax shall be chargeable to income tax under the head income from house property. So, okay. Therefore, only property occupied by the assessee for the purpose of own business is excluded from the scope of Section 22. A logical corollary, Section 22 does not exclude the scope income from property held as stock trade. Calcutta High Court, Azim Maghi Estate observe that the rental income from the unsold flat of the builder shall be taxable income from house property, correct, as provided under Section 22, and since it specifically falls under the head, it cannot be taxed under the head of profit and gains from the business or profession. Therefore, the assessee can entitled to claim standard deduction of 30% of such rental income under 24. The fact the flat has been claimed is not chargeable to wealth tax. Treating the same as stock in trade, it will not affect the computation of income under the Income Tax Act 1961. The rental income from the unsold flat and builder A and B in this case shall be taxable income from house property and provide under Section 22. Since it specifically falls under the head, it cannot be taxed under the profit and gains from the business and profession. A and Co would be entitled to claim statutory deduction of 30% for such rental income as per Section 24. Therefore, the action of the assessing officer in the case of denying the statutory deduction and treating the income from let out flat and business income is not correct. Issue involve provision applicable, analysis and conclusion. 4. Atlant Italy, a company incorporated in France, are engaged in manufacture and trade or supply of equipment and services of GSM cellular radio telephone system. It is applied hardware and software to various entities in India. The software licensed by the assessee embodied the import of software. Process in which required to control and manage a specific set of activities involved business use of consumer. So they are selling the product. India is getting making the payment to the import of software. Software was also made available to the consumers and who used to carry out their business activity. The assessing officer contended that the consideration for supply of software embedded as in hardware is a royalty under section 1914. ராயல்ட்டியே கன்சிடர் பண்ணிட்டாங்களா? Single payment now, okay. It's a packed payment now, you can consider royalty. Examine the correctness of the action. The issue involved. The issue under the consideration in this case is whether the consideration of supply of software embedded in hardware would be tantamount to royalty for attracting a deemed accrual of income under section 916. Provision applicable as per section 916. The income by way of royalty payable by a person who is a non-resident would be deemed to be accrued arising in India, and the royalties are payable respect of the any property, information used or service utilized for the purpose of business or profession carried out by such person at in India or for the purpose of making earning any of the income from the source of India. For this purpose, royalty include transfer of all rights or use of right to use of computer software irrespective of the medium through which such right is transferred. Analysis. The fact, the case, the circumstance similar to the fact CIT, Alcade, Locate Canada, where the above issue comes before the Delhi High Court. The court observed that the software supply is an integral part of GSM mobile telecom phone system and it used for cellular operator for providing cellular service to its consumer. When the payment is made for the hardware in which the software is embedded and the software does not have any independent function existence, no more would be attributed to royalty for the software in terms of section 916. Conclusion. In this case, if it is assumed the software that was loaded on the hardware and embedded in the system does not have any independent existence, then there would not be any independent use of the software. If it is so assumed, the rationale of Delhi High Court ruling under the apply to the case of his hand. According that, the action of assessing officer is treated as consideration for supply of software embedded in the hardware, so royalty section 916 is not correct. Alternate answer, okay. The fact that the software does not have independent function exists from its basis of rational high court, Delhi High Court ruling. Since the fact is not explicitly given in the question, neither can be interfere with the information given in the question. It is possible to take the view of software as an independent function existence owing to the consideration for supply of software embedded in the hardware would be tantamount to royalty. The view of the possible owing to the language of the question, wherein it has been stated that the software is also made available to the consumer who used to carry out the business activities. According to the view taken, the action of the assessing officer is treated as consideration for a supply of software having independent function existence as a royalty. Section 916 will be correct. True. Hmm. No, I mean, ABC Limited, a software giant in India, set up 100% subsidiary company by name of ESHD Inc. Switzerland, 10th April 2022. The subsidiary company SSD is a mainly engaged in software services, hardware services, and data backup service in the three different countries, Switzerland, Sweden, and India. The following information are furnished in SSD. In Switzerland, India, value of assets as per the books 24 crores, in Sweden 12 crores, and India 24 crores. Number of employees 30, 10, 28. Payroll expenditure 4 crores, 2.65 crores. Total aggregate income 80 crores. Break up the total income. 80 crores, derived, 20 crores derived from the transaction. Mm, where purchases are made in associate enterprises and sold to non-associate enterprises. Okay, 24 crores derived from the transactions where both purchase and sales are made from and to associate enterprises. 16 crores derived from the transaction where purchases are made from a non-associate enterprises and sold to associate enterprises. 8 crores were made by the income from capital gains on trading of shares. 4 crores interest income, non-associate enterprises. During the financial year, the total five board meeting held and two in India, one in Sweden, two in Switzerland. Based upon the information determine the residential status of the SSD, apply the provision of POEM. Residence state of the company. Okay. The company is a company, is an Indian company? No. Whether the POE of the company is in India or the previous year? No. The company is a non-resident. Okay. Is a company is Indian based company? Yes. No, the company is a resident in India or the PM of the company is in India or India? Yes. No, the condition of POEM in the POEM in India is permanent establishment in India. Is not applicable in the case of the companies engage in activity outside India. Majority of board meetings are held outside India. In the case SSD, majority of board meetings are held outside India, and the companies engage in active business outside India because of SSD, INC fulfill condition active business outside India. Hence POEM, SSD, INC is not India. SSD, INC is non-resident in India. Working note, active business outside India. The company said that the active business outside India, the passive income is not more than 50% of the total income of Indian company. Assets in India is 50% total income. Employees are 50% of total employees. Payroll expenses 50% of total payroll expenses. Particulars total in India percentage. Total income 80. In India 32, 24 plus 8, 40%. Assets 60, 28, 41%. Employee 68, 28, 41%. Payroll 12 crores out of 41, 45%. The passive income means a business, I mean, income is related to the transaction and purchase associated to the enterprise or income from capital gain. Sure. Thank you.